Good evening, ladies and gentlemen. How's everyone doing tonight? Still in work mode. Still in work mode. Although I have to admit, I went down a little Instagram trail after somebody sent me something. And I may have sent the White House's favorite quant a little video, which hopefully made him laugh. Um, Before we get into anything, please take a moment, read the disclaimer. I am not a financial advisor. I am certainly not your financial advisor. I'm just some guy that does way too much research, makes YouTube videos for entertainment and educational purposes only. Please take a moment, pause the video, read the disclaimer. When Kris gets on, do not take anything he says seriously. He also is just somebody who does way too much research. Not late. I don't know why you guys are saying late. Start it at 9 o'clock sharp. Just like I said, somebody else is late, but not me. Not me. So, few things. Kris will be here in a little bit, so you guys are gonna have to deal with me for the beginning part. Few things I want to talk about first. We had Evercore come out with their top software stocks for 2026, and guess what's on there? Give everybody one guess. What's on there? One guess. One guess. Anyone? That's right. Salesforce and Microsoft and Oracle were on there, but Salesforce was in there. And I got to tell you, the more I look at Salesforce, we looked at the numbers last night, the more I truly believe this is going to be the AI catch-up play in 2026. It is too much of a free cash flow machine, and I really think people are overlooking it because of a ridiculous narrative. So we'll see what happens, but Salesforce is certainly on my list of things I'm getting myself for Christmas. I got myself Microsoft for Christmas also, first-time shareholder, not too long ago. And Matt Money, the White House's favorite quant, is in the chat. And I got to tell you, the memes are amazing. I'm going to show the latest meme. I can't believe how good they are. Keep them coming. Whoever is making these memes, keep them coming, and please tag me in them. What do I got to do? I got to go to replies on X. Yes, here we go. Here we freaking go. I mean, is this not amazing? The White House, quantitative, 47. Matt Money with the Angels. I mean, this is just amazing. Pedro, you made this? Oh my God, that's awesome. Good job. I love it. I love it. I love it. Keep them coming. We need more Matt Money memes, the White House's favorite quant. Absolutely hilarious. June, thank you for being here. Ray, Michelle, thank you for being here. Appreciate everybody coming and hanging out. We're going to try to have some fun. I wish I could leave this up the entire time, but we're not going to do that. To Matt, Spencer, thank you for being here. Really appreciate everybody hanging out with me on a Monday night until our buddy Kris arrives. So, in addition to Evercore putting out their list, Salesforce made a little bit of news. They acquired Qualified. Definitive agreement to purchase Qualified, a provider of agentic AI marketing solutions. Terms were not disclosed. Transaction is expected to close in Q1 of Salesforce's fiscal year 2027. I'm going to be looking more into this. I am a little excited. I'm hoping this starts to change the narrative a little bit around Salesforce. I mean, if I bring up the valuation of Salesforce, it is it's so undervalued. I don't know why we are still in this position with them. People still think that this is a company that's dead. Dead companies don't grow. They have grown into a $40 billion a year revenue company. They're doing 11.8 billion in EBITDA. They're doing almost 9 billion in operating income. This is a company pumping out 13.5 billion in cash from operations. And they are expecting to continue to scale it. So, Matt Money is right. Steven's favorite baddie is Matt Money. The real question, Matt Money, is what did you do after the stream? Did you potentially watch an episode of Billions? Maybe. We'll see. See what he says. But in all seriousness, I think paying 21 times EBITDA, 18 and a half times operating cash, and less than 20 times free cash flow for Salesforce is very interesting. And I think it'll do good next year. We'll see. Alphabet made the news today. They bought data center energy provider Intersect, $4.75 billion to power cloud AI ops. So Google said on Monday, which is today, that this deal will bolster its computing power capabilities necessary for cloud services and artificial intelligence. Deal will be funded using cash. No shit. Alphabet only has $100 billion in cash. Of course, they're going to pay cash for this. And it will take on Intersect's existing debt. I need to look into how much debt it is. Not worried about it. Let's see. Intersect will help us expand capacity, operate more nimbly in building new power generation in lockstep with new data center load, and reimagine energy solutions to drive U.S. innovation and leadership. We look forward to welcoming Sheldon and the Intersect team, Sundar Pichai said. Well, I'm excited. Alphabet's one of the best companies in the market. I need to look into more about what this company does. And while we're on the topic of Alphabet, Waymo resumed robotaxis after the blackout in San Francisco. I actually did not know about this until Amit told me, and it is pretty interesting that the power outage was widespread that caused gridlock across San Francisco with non-functioning traffic signals in transit and made Waymo's shut down. I mean, it's funny because Elon posted on social media that Tesla robotaxis were unaffected by the San Francisco power outage. I took a picture today when I was stopped at a light in the city, and I sent it to Amit. And I was driving right past the Apple store, right next to Central Park, right across from the Plaza Hotel. In rush hour. People can disagree with me all they want on this. I do not see how FSD is going to work in New York City anytime soon. Now, I'm not saying it's not going to get there, but I truly think that the timelines that some people are expecting with full self-driving in major metropolitan cities is not going to work. With all the cops directing traffic, with all the pedestrians crossing, with all the city bikes and bicyclists going down, and just the pure chaos, I don't see how it's going to work. We'll see. I'm not seeing it right now. Show the picture. I'll have to send it to myself. Hold on. All right. Sending it to myself, and I will show the picture that I sent him. And if anybody has an idea of how to do this easier than myself emailing myself, please let me know. All right. Let's go to the email, download it, and we'll share it. And don't make fun of the photography because it is It was done very quickly. Hold on. How the hell can I download this? There we go. All right, picture coming up right now. There is no way, and look, it's not a good picture. I took it very quickly while I was on the live with him. Okay. If these cars weren't moving, if these cars weren't here, it is all gridlocked straight down there. This is 58th right here. Okay. The Apple store is right here. This van, and because of where I didn't do it widescreen, you can't see the pedestrians here. There's just no way full self-driving is working in any area like this. I'm sorry. Not happening. Not freaking happening. Matt, don't start this. Don't start this. Do not start this. So this is what I'm going to say to you guys. I got rid of the car. I got rid of the car that I owned, and I am leasing something because I am beating the shit out of it in the city. Trust me. You drive in and out of the city all the time. The last thing you want to do is, we're going to leave it at that. I am destroying my lease, and it is amazing. Matt, what is Matt Money saying in the chat to get everybody riled up? We need a dash cam lives with Steve. I don't think that would even be legal, to be honest with you. Shit that comes out of my mouth in freaking New York City traffic, man. It gets pretty bad. It gets pretty bad. I'm not honking enough. Listen. New York City traffic is freaking crazy. I am looking at this from a very objective area where I have no doubt that full self-driving is going to do great over time. And I have no doubt that in areas where it is not gridlock traffic like this, it will do fine. But I am just not a believer that you could do full self-driving in these types of areas. I'm just not. Spencer, if this becomes a thing, I mean, I blame you. But thank you for the super chat. But I blame you if this becomes a thing. You started it. Spencer started it. And I guess Matt Money kind of antagonized her to start it. You're right. It is NYC. Traffic is crazy. But you know what? At some point, full self-driving will be here. And at some point, I will own a Tesla. When Tesla is able to create a car that legally is allowed to drive me around when I sleep, I will 100% own a Tesla. But until then, I will lease cars and beat the shit out of them and turn them back over. Let's see. So Waymo's resuming. I do think that there's a lot of things that we got to wait for before this is allowed in big cities, but we'll see. I mean, look, on the West Coast, it's a little different than here, but I don't see it in New York City anytime soon. We were talking about Tesla. We were talking about the valuation on the market close today. I would admit Tesla's doing great. I still think it's a little speculative. And I think it's more story than numbers because the fundamentals just from a business standpoint are not there. Jesus Christ. Oh, Matt. Thank you for the super chat. You and Spencer, you guys are freaking no bueno. What is going on here? Ray, what picture did Spencer make? I want to be on the group chat. What's going on here? Why am I not on the group chat? Invite me to the group chat, please. Can't mod the mods. That's hilarious. Hilarious. And one of the other things we were talking about today is the whole Netflix debacle, which is happening. Now, I was at the office today and I did not get to watch anything on CNBC. I was very lazy when I got home after being on the market close and then hanging out with the White House's favorite quant on his show. I was going to write an article about Ares Capital. I decided that I wouldn't have enough time, so I didn't. And what is going on here? What am I getting here? What is going on here? Mad Money. Oh boy. All right. Mad Money sent me something that is a thing of beauty. Now, the real question, Matt, put it in the chat. Put it in the chat. Did you do what I said? Yes or no? I want to know, Matt. I want to know. Kris will be on in a little bit, everybody. He's not sleeping. He actually messaged me right before the show. He's not sleeping. He'll be on around 9:30. So you guys got me for a little bit longer by myself. Check your iMessages, Stephen. What do you mean iMessages? What the hell's iMessage? What are you talking about? I have regular text message. Don't be, Matt, don't be doing anything fancy, okay? I'm not a fancy guy. iMessage. What is this iMessage bullshit? You guys finally got me on freaking WhatsApp. Oh my God, no you didn't. Hold on. Spencer, did you make... all right, hold on. Hold on. Matt and Spencer, am I allowed to show what you guys made or not? Because that is freaking crazy. That is crazy. I'm allowed to show it? Okay. Everybody sees this. Spencer said yes. Okay. Spencer said yes. This is incredible. Oh my God. I may have to make, I can't make it as my wallpaper as much as I want to. Holy shit. I'm downloading it. Give me a sec. This is crazy. I have to say, did Amit see this yet? You guys are the best. I mean, we say it all the time. I truly believe that this is the freaking best community out there. And I am not gassing this up. This is so crazy. Oh my God. I can't believe this. Okay. He saw it. Okay. I mean, this is crazy. The fact that you guys got me in a tinfoil hat, Matt and milking cows, and Amit has the cowbell. This is crazy. But explain to me, okay? Why is Drake standing next to Jim Cramer? Why? Like, why do we have Michael Jackson, Epstein, Kramer, Drake, and then Nancy? Like, who thought of putting them in? And what was the methodology behind this? Because the Epstein files leaked? That's hilarious. Oh my God. This is absolutely hilarious. Jesus Christ. And if this is the worst that freaking AI is ever going to be, I mean, Jesus. I am going to get a tinfoil hat. I really am. Seriously. Yeah, Austin, when you come up to New York, you better be yoked. Or otherwise, I'm going to say this is false advertising. That's Austin. Wait, there's more pictures you guys are sending? Matt, if there's more pictures, send it to me. Oh, that's funny. That's funny. All right, so I want to discuss Warner Brothers and Netflix, and I want to see what they said because this is heating up. I really think that Netflix is not going to get the deal done. I think Paramount's going to get the deal done. I want to see what the commentators on CNBC had to say. Don't worry, Kris will be here soon, and I will stop ranting, and we will go inside the numbers on one or two companies. But let's see what they have to say, and then I'll explain why I don't think that this is going to get done.
For Warner Brothers Discovery, let's bring in Lionsgate Vice Chairman Michael Burns, friend of the show for more than a decade at this point.
Since the beginning of the show.
Beginning of the show, yes.
Since the Carl icon,
like the first
Michael
day
Burns
I was sitting
days.
on set. Yes.
We should play some of those clips.
Michael,
please don't.
It's great to see you. How do you see this shaking out?
Well, I don't have a horse in the game, but I think it's in many ways great for us. It's certainly validating the value of premium content because obviously the library is attractive for both bidders in this particular case. So I don't know who ends up with it. I think that it's good for us.
There were reports over the summer that Legendary was eyeing a deal along with Apollo for Lionsgate. What is the status of that? Are you still in talks?
I never really talk about deals or potential deals, but there's a lot of obviously everybody overuses the word synergies. There's a lot of value to what we have to a lot of different companies, which is scale, particularly on the library with premium content. It's a core asset. It's John and I have assembled that library over 25 years. It's a $1 billion run rate, and it's a big margin business, $500 million plus. So it's a valuable asset.
Have you been entertaining calls?
Have I been entertaining calls?
I mean,
we're paying attention.
Okay.
To what's going on there, and look, we're in a place that our stock since the separation has moved nicely recently. But again, we're a pure play that we weren't a pure play when we were combined with Stars. So now you have Stars trading on NASDAQ where we are right now, and you have Lionsgate trading on the big board. And so we are now back to where we were, which is a pure play content.
So what Stars is ticker? I didn't even know that Stars was public. If anybody knows the Stars ticker is, put it in the chat, please.
Company, which we think is the right place to be right now.
It is the right place to be, and this is out there in the public. We've talked about it. Steve Mnuchin's been buying stock. Steve Cohen's been buying stock. If you just do back-of-the-envelope math, you look at where Lionsgate is trading in terms of this deal, and it's too cheap, and I've said that before. That's not my question. My question, who do you think needs it more? My sense is Netflix could use it, but they don't need it. Paramount, the one to me, is the one that really needs this. Does that make sense?
I think it's actually great for either company. I think Netflix always wants additional library. Look at some of the big performers that they've had. They look at Suits, for example. So I think they could use that. You always need, great library. I think David Ellison and the team there, they want scale. And
I'm sorry. I was going to not pause the video, but I apologize. Out of all the stuff in the Warner Brothers media library, the fact that he said Suits, I mean, am I crazy for thinking that that's maybe the 20th thing that should come to his mind? I don't know.
This certainly would give that to them. So I think it's good for both. I don't have a horse in the race. I think it's nice to see valuable content being valued higher.
Michael, Mel just mentioned Apollo taking a look at you guys. Do you think, obviously Versant is being spun out of NBC Universal. There's talk that obviously private equity is going to take a look at a lot of these assets. Do you think that, you've been around this business for a long time, what does it mean when private equity starts looking at these sorts of businesses? Because I have to assume it gives you guys some more room to basically put your head down and just focus on the things that you want to focus on.
Private equity has, I don't know, I saw the trillions and trillions of dollars that they have, but they want to put it to work. They don't get paid unless they put it to work. But I do think if you take a look at the landscape, the strategic alliances, I would think, could pay higher prices than private equity because of the synergies that are there. I could name 3 or 4 companies, which I won't, that I think there'd be a great strategic alliance with us, and there'd be a great deal of synergy savings. And if you put synergies not only
First letter.
not only synergies, and again, for cost synergies, but also revenue synergies. And if you put a multiple on that, I think we're in a good place.
All right. I want to look at a few things with everybody. So let me bring this up. All right. So what was it? Star Group LP common units. Is this it, everybody? Yes, no, maybe so. I know somebody put STRZ. Stars Entertainment Group. Okay. 191 million. 1.3 billion revenue. Good gross profit. What is that, like 45% or so gross? Negative operating income. Does not make money. Negative free cash flow. Not liking it. What does balance sheet look like? 37 million cash. There's no long-term cash on the books. Not a lot of debt. Okay. Not a lot of shares. That's interesting. Let me see what the EBITDA is. EBITDA 155 million. It's not a horrible ratio, but it's not good either. I think Stars is worth taking out. One of the bigger companies. I'm actually surprised Amazon or somebody hasn't taken them out of their misery yet. What was the other one? Lion. So Lionsgate Studio. Didn't this get bought by somebody? I could have swore Amazon bought them. Or was that MGM that Amazon bought? I feel like somebody bought Lionsgate before. Margin's okay. Makes money on operating. Loses a ton of money. All right, I need to see what the unusual items are for that. We'll go to the cash flow statement in a sec. All right, 202 million cash. $2.6 billion debt. Hold on. I don't think I was looking at the right thing. I apologize. I didn't move it over. All right, so the TTM, operating income. Yeah, still negative. Okay. What's the free cash flow? Let's see what they're doing with freaking issuing debt. A little too much stock-based compensation here for my liking for their numbers. They made some acquisitions. All right, no long-term debt issued, but they are issuing debt. But they repaid a little bit more than they issued, so that's good. Repurchased more than stock than they issued. Neither of these are interesting, by the way. Just so everybody knows, I'm not interested in Lionsgate or Stars, but I do think they are acquisitions that can be made by bigger companies just for the pure content play. I do not think the Netflix deal is going to get done. Now, I could be 100% incorrect. I do not think that the government is going to allow it to happen. Oh, Jesus Christ. You guys are ridiculous, Matt. You guys are ridiculous. I like the first picture a lot better. We're not going to show the second picture. The second picture is bad. First picture is epic, by the way. So when I look at the numbers from subscriptions, I don't believe it'll get through the FTC with Netflix and Warner Brothers combining, because they'll have over probably close to 450 million subscribers, which, look, you can't say, you guys should have sent me this one first, because the first one you sent me is so freaking good. I don't think you can top it. I don't think you can top it. You guys want to see the set? All right, I will show you guys the second picture. Hold on. Where is it? So this is the second picture. Bad may not be the word. It's not as good as the first one. The first one was just so epic that I think the first one was just much better. Spencer, I want you to top it. Please top it. But now Matt keeps sending me pictures now. So let's see, Matt. What else did you send? You guys are hilarious, by the way. Please explain for those joining. I don't know. We talk about milk a lot, and for some reason, I guess the mods decided to start making pictures, and the first picture that they made was hilarious. We'll show it again. Amit and Matt milking cows, me with the tinfoil hat, and for some reason they decided to put Michael Jackson, Jeffrey Epstein, Kramer, Drake, and Nancy Pelosi in there with Austin. I mean, I don't know. I don't know. But when you see this, you can't go to the other one. You should have sent them the opposite way, because this is just freaking amazing. Absolutely amazing. All from the mind of Spencer. I mean, listen, keep them coming. I want to be on the group chat. I want to get an invite to the group chat, everybody. I'm actually a little hurt that I'm not on it. Anyway, I don't think that you can combine Netflix and Warner Brothers because of the massive scale. Excuse me. And when you combine Paramount and Warner Brothers, they become the number 3 company, right behind Prime. I think they're neck and neck with Disney, or maybe just a little bit more subscribers than Disney. But I'm having a very hard time seeing Netflix getting this deal across the table. And I really do believe that the administration will not allow it to happen. If it's not the administration, I don't believe that the FTC will allow it to happen. I think Paramount and Warner Brothers collectively will have around 170, 180 subscribers, something like that, million. So we'll see. And look, as a shareholder of Warner Brothers, I want the most money I can get for my shares. So I want the 30. I think that I think we're going to see Larry Ellison and team come up over the top again. If I was the chairman of Warner Brothers, this is what I would say to them. Netflix is going to owe $5.8 billion if they can't get the deal done across the table. And if Warner Brothers walks away from the Netflix deal, they owe $2.8 billion on a breakup fee. I would say to the Ellison boys, you have to add $2.8 billion. You have to pay Netflix our breakup fee, and we want 32 a share. So that's what I would be saying if I was the chairman. I do think that they're going to come over the top. I don't think that this is over yet. And we have a guest, everybody. Mr. Kris Patel. What's going on? I need a goddamn prediction market about his damn mic not working. I swear to God. Kris, is it working? Maybe he's on the phone.
There we go.
So
What's up,
have
Victor?
you seen the pictures that they're making
Of what?
from the mind of Spencer? Have you seen this?
No.
All right, let's get Chris's first reaction.
That's awesome, dude. That is hilarious.
Hilarious.
Why does Epstein Drake? Who's the white dude?
Austin.
Austin. Nancy Pelosi. That's actually really funny. I love it.
It's hilarious.
Michael Jackson, Jim Cramer. All right, what's next?
You can't make this shit up.
Have you ever milked a cow?
No, I have not. I can't
I
say
have
I've
milked a cow. My grandma, because when I was younger, of course, I was in the village with my grandma, and yeah, like every morning, you would milk the cow. You'd basically take the udder, you'd squeeze it, and you pull it down, and it's like a stream, and you took it, and yeah, man. There's no such thing as like fresh milk. Fresh milk is awesome.
Have you seen the memes about our buddy, the White House's favorite quant, coming out?
Yeah, man. I heard he's under investigation, by the way.
Dude.
I saw that on Twitter. Pretty sure Homeland Security is watching Matt. Hopefully they're getting good stock advice.
I still can't believe that happened. And the memes keep them coming because they are freaking hilarious.
I think he's leaning too hard into it now, man. It's pretty bad. Like, he's calling himself the White House quant, and I'm like, bro, eventually, like, Secret Service is gonna say to you, like, please cease and desist calling yourself that.
I mean, I wouldn't be surprised. They're in charge of
The Treasury.
sweet currency, right?
Yeah.
Wouldn't be surprised.
Yeah.
All right, Kris, you want to talk about a little MPC?
We kind of didn't talk about Comcast last week, so let's talk about Comcast, and then we can talk about MPC.
Okay,
so Comcast, did you do your DD on it? Did you do research?
I have my DD. I'll pull it up.
Okay, good.
I have it.
So someone asked a good question, and I'll just address it really quickly. Kris, what are your thoughts on Japan? Okay, so Japan is in this weird scenario where they have inflation finally after God knows how long. And because of the total debt that they have, they've got a big problem. So as inflation has gone up, they are a import heavy country when it comes to energy. So when your currency devalues, that means you have to basically spend more money to get the energy that you need, right? So it causes inflation to go even higher. And then that inflation just translates into more and more expensive things. And then workers kind of start demanding more. And then that demand comes up, and then you have to pay more for the workers. And Japan has a very restrictive immigration policy, so they don't have a lot of workers, which means the workers have pretty good leveraging power. And so because of that, you're starting to see inflation creep up in Japan. And one of the fallouts of that for us in the United States is that they have been prolific buyers of U.S. treasuries, especially their insurance companies. Their insurance companies buy up U.S. treasuries as a hedge. So if Japan has inflation down to like 0%, then of course they're going to look for a real yield, in which case they buy our treasuries, right? And a lot of them bought long yield, like longer term treasuries. So it ends up being that now that they're pulling back, that means that excess demand for U.S. treasuries from Japan is kind of slowing down, and if not kind of reversing. So now the U.S. is in this place where we want the long bond to go down, but that also means that we have to do a better job at marketing the long bond. And the long bond is how how mortgages are priced, right? So if you have a 10-year treasury, usually you get about 150 to 200 basis points on top of that 10-year treasury, and that's how you get your mortgage rate, right? So if you think about the current 10-year yield around 4.15%, you add up about, let's say, 200 basis points. That's how you get a 6% mortgage, right? Sometimes if you're lucky, you probably get like a 6, but it fluctuates in between those numbers. So the thing is, if the Trump administration wants, and I know that they want it, the interview that they had, maybe we should play that for the people so they understand. Let me pull up the YouTube video that actually shows what we were talking about with housing. So he doesn't want a housing crash, which could restore affordability. But at the same time, one of the ways that you're going to get affordability back is if people's mortgages come down. And so, just 1 second. You all right, Steve? Do you have anything to add to that?
Nope. Keep going.
Yeah. So the challenge, where is it? It was a press conference where they asked him like what he was going to do. Conference. So the challenge is, if you crash the housing market, you're going to cause all sorts of like ripple effects in the economy, because then you get something called a negative wealth effect shock, right? So if, let's say, you have a home, it's appreciated to 700,000. If the price of the home goes to 500,000, that means that you feel less wealthy, makes you spend less money, and that could be a problem for the economy. So how do you make things affordable from a housing perspective, especially for younger people, while at the same time keeping home prices elevated? Well, the only way you can actually do that is by getting mortgage rates that come down, right? So this way you get some semblance of affordability. Of course, then there's natural wage growth. Everyone makes 3-4% more every year. Let's say naturally goes up. That means that within probably like 3 years, affordability gets back to somewhat normal, especially if mortgage rates come down to about, let's say, 4.5%, 5%. That would be very attractive to prospective buyers, but it would also be very attractive to people who are willing to sell, right? So you kind of unthaw the housing market. Now, in order for you to get to that, you need the 10-year treasury to go down at least another 100 basis points, right? So I don't know how he's going to get the long bond to come down 100 basis points, but that's the goal, essentially, where you want the 10-year treasury to be between probably 3 and 3.25. I think eventually he will get there, because naturally home prices are starting to come down. So if you think about it from a macro lens, if, let's say, home prices flatten out for the next, let's say, 3 to 5 years, whatever, then that means that real wages will kind of restore affordability on their own. And that also causes this massive disinflationary wave where home prices are not going to crash, but they're just not going to appreciate for a significant amount over the course of the next 5 years. And so that is how you can restore affordability also. So if I were to guess on how the administration is going to approach this, they really need to work on that 10-year. That's the best case scenario. Now, that's the real question here is how are you going to get there? And yeah, just I don't know. I mean, eventually, I think the market is going to have to correct. Valuations are extended like crazy in the market. So if we do get sort of a stock market crash or correction, whatever you want to call it, I don't think it's going to be like a 2008 level event, but it could usher in maybe like a few years of underperformance by the S&P. And so there's also something to be said about large caps versus small and mid caps kind of rallying on top of a lower interest rate environment. So I'm trying to think how to best position for the next couple of years outside of just buy the Mag 7 and chill. But no, that's why we're trying to find some of these companies right now that are very undervalued relative to their historical valuations. And one of them, in my opinion, right now is worth looking at is Comcast. So what do you have? Do you have any opinions on that?
Yeah, I want to go into one thing that you said before we go into Comcast, but before I do that, I want to know what the hell ARK Invest is thinking. Okay, did you see what they did today?
Wait, before anything, someone's like minimum wage isn't going up, bro. If minimum wage is how you measure like companies don't hire based on minimum wage. I don't know anyone in my circle or any even remote circles that makes minimum wage. Minimum wage is like a floor price, not the market price. The market price for a person, even at the most basic level right now, in my opinion, is close to $15 an hour. I don't know anyone that's working for less than 15 an hour. Maybe sometimes 12 to 15. It's a range. Maybe, yeah. So minimum wage is not the answer to it. And I know some people are like, minimum wage should have gone up years ago.
Sorry,
go ahead.
I want to get your raw opinion on this.
Mm-hmm. Kathy Wood buys Archer, Oklo, sells Tesla, Palantir, Rocket Lab. I mean, it makes sense.
I'm not against her taking money off the table on Tesla or Palantir, but to buy Oklo, like seriously?
She's a momentum person, dude. Like she's probably not thinking long-term value. She's thinking like, okay, right now energy constraints are fueling like demand gaps in AI. So, if the market gets heated, then Oklo will rise, and that's why she probably bought. I mean, dude, she bought Palantir, right? Do you think Palantir fundamentals are correlated to how the stock is performed? So if you think that
Palantir should be a $60 stock, that.
Right, exactly. So then why are we questioning her play on Oklo? She could be riding the momentum, which she's totally fine riding the momentum, and at the same time, pumping the industry in general. I mean, remember what she said? Tesla was going to be a $5,000 company or some shit like that.
I still want to talk to somebody at ARK Invest because I don't understand their thesis. But
they're pumpers, bro. They pump. It's clear as day. They pump.
What you said, I think that there's a lot of companies that are very interesting for 2026, and I am coming very far around on the fact that we are going to have an everything rally next year. Here's why. Mm-hmm. The more that I think about it, I'm not backing down on the big companies are just going to get bigger. I also think that means that the bottom 450 of the S&P gets stronger because they have the balance sheets and the cash flow to implement AI stacks to create performance and increase productivity, which should allow them to expand margins. And if that happens, they should see earnings expansion. I also think that with everything that we've seen in all of the earnings calls, we have true vision into the deal books going forward. And the big companies are just going to get bigger as we need more of everything. And I think the way that the economic projections are set up right now, the Fed has the next 3 years of pro GDP growth. We have inflation, which is crushed and is likely going to continue to go down. We are going to be in an environment where I do think we're going to get 3 rate cuts in 26. Even if the Fed pauses, I think the second half of the year, we end with 3 25 bip cuts. And I think that we get between 2 to 2.5% in 2027. If we get below 2%, will surprise the shit out of me. I think we end it somewhere between 2 and 2.5. That will unlock the housing market. We'll get a lot of construction done, a lot of renovations done. We'll have a lot of loan originations done. I think the financials will get even stronger. And I think that this is an economy that has a lot of staying power. The two things that worry me are if the Fed is wrong on unemployment, and if unemployment keeps going up, and I know historically it's at a low level, but it was at 3.4. We're now at 4.7. I'm sorry, it was at 4.6. We're now at 3.6. It's now at 4.7. And if that keeps going up, that's going to be a problem. But there's nothing on the horizon other than the Supreme Court overruling tariffs and us have to figure out a way to pay back money that we took in. And I'm not even sure if that's possible or what we would do. Those are really the only headwinds I'm seeing for next year at the moment. And if we get deadlock in the political market where the Republicans lose one side and keep the other, the market's going to love gridlock. They're going to love that. So next year could be a really good year. The question is, are the bottom 450 going to outperform the top heavy companies? And I'm going back and forth with that because I see a bunch of companies that are so undervalued. And I think that we're going to see a lot of value unlocked over the next several years that, believe it or not, I think the S&P, I really do think 8,000 next year. I think we hit 7,000 this year. Think about it. If we hit 7,000 this year, what is that, 13% up next year? That's not crazy.
No, it's not. But I do think that there's probably some volatility in between. Like, I mean, the reality is, look, the market's valuation right now is heavily concentrated at the top. So it's more than likely that we don't see necessarily a quote unquote correction, as some people would call it, but more of like a catch up between small and mid caps getting to a higher valuation. You know, that's a possibility, especially if there's more rate cuts. I think that's one of the things. Now, I do think that there will be an opportunity to load the boat next year when we have a Liberation Day Part 2 kind of scenario. You know, I think there's definitely possibilities of that, where one or two economic events just kind of like go in the wrong direction and everyone just gets stoked up with fear, and then things just kind of correct their way down, in which case now and that typically happens once every 2 to 3 years, right? So if you look at like for us, we had Liberation Day where sentiment just fell off, and basically cratered, and the markets were down almost like 15-20%. Just pretty insane if you think about it. But then we had a nice V-shaped recovery post correction once the administration kind of reversed course. So I think the administration, to some degree, is not exactly the most dogmatic when it comes to trying new things. Now, what does that mean? That means that theoretically you could get a significant amount of volatility from policy actions that the administration just kind of reverses on, because the last thing they want to do is, cause an economic catastrophe. So, I mean, the idea that there is a Trump put, in my opinion, is a real thing. So I would say there will probably be a point of pain that this administration is willing to accept in order to get their policy goals across. But the minute like it gets to that level, they'll react and they'll reverse course, in which case then the stocks, the market itself will just ride up. So
well, I got one more thing that is a little ace in the hole that I haven't said.
Mm-hmm.
I'm going to say it here. We're overlooking what happens come April. We have a lot of different tax rules coming into play. Mm-hmm. People are going to have more cash in their pockets from refunds. You're going to have no tax on tips, no tax on Social Security. And think about this, no tax on Social Security for boomers that have pensions and large 401ks. That Social Security is going back in the market into income-producing assets, most likely. And there's going to be more capital floating around that is likely to get invested. So you also have the standard deduction going up significantly. So I think we're going to see a lot of investments over the next couple of years in this market.
See, this is the problem that I have with the current situation. We already have an equity valuation rich market, and I get the administration's like goal to try to keep markets high and stable, but the cost of what they're doing right now is you're kicking the can down the road, and you're kicking it down where the next president is going to have to come in and really clean up a lot of bullshit. Like people, in my opinion, are underestimating just how much of a problem we're creating by this excess spending. So it's a weird dynamic where on one hand they're cutting back on social services, which is fine. I think the social safety net definitely needs a little bit of a course correction, because the Biden administration really went to ham with building a lot of that infrastructure that, in my opinion, was very wasteful, and that ended up being in the hands of a lot of NGOs and the people that work at those NGOs. So I definitely agree that the administration is taking the right policy approach on trying to limit those expenses. But at the same time, the reality is that fiscal austerity is not even remotely in their minds anymore, even though that's the platform which got them elected. Like you remember Doge. I think the Doge lasted 90 days maybe. I was very hopeful with Doge being able to cut back on so much expenses to the point where we could actually get our national debt under control. But then I look at this defense spending bill that they just passed, and they're spending another $1 trillion. And I'm like, dude, it's peacetime. Like right now is a good time to kind of cut back on some of that military spending, reinvest that money back into, debt repayments. On one hand, you won't extend the subsidies for the ACA, and that's about $30 billion a year. But you're like, yeah, let's spend more on the military. And as much as I'm a former soldier, I can tell you there are a lot of programs within the military that are not related to anything to deal with war fighting. And there's a lot of fraud, waste, and abuse in the military industrial complex. That's the U.S. So a lot of times people will claim like, oh yeah, if we don't spend this money, then we won't have the ammunition to fight the next war. And clearly companies like Anduril, Palantir, and all of them have shown that you just have a very wasteful defense procurement apparatus that sees that there's so much waste that goes through the system. And the challenge that you run into, in my opinion, is that you spend all this money, you're not necessarily getting everything that you need to, and you're creating another problem, which is you're destroying the fiscal health of the country in the hopes that you're spending more on national security. In my belief, you have to be balanced, right? You can't give up fiscal security for national security, and you can't do national security without fiscal security, right? So long term, you kind of have to be balanced. And I think right now the administration, they need to take the bond market a little bit more seriously and create policies where there's going to be pro-growth. Totally understand pro-growth is the way that you get yourself out of this mess. But at the same time, you need to have some level of fiscal austerity to give the bond market some assurances that you're not completely going to devalue the dollar, in which case, the attractiveness of the US dollar long term is not good. And then you don't get your other parts across the finish line. And what I fear to be the biggest problem is that at some point the house of cards falls apart, and instead of getting someone who's a pragmatic leader, we get a socialist in charge, where people are like, oh, we need to fight the oligarchy. And now everyone, the fact that AOC is as high as she is in the prediction markets is insane, considering that she's a financially illiterate person. But what the one good thing that she knows how to do is, jimmy up votes when it comes to people that are disenfranchised with the current system that they're not benefiting from. So it's like I said, I would say we need to create a policy where moderates take a more active role in government, and not the fringes that basically keep coming to power, where you have like the uber progressives that just want to do nothing but giveaways. And then you've got the conservatives who come in and they're just, let's spend all the money on tax cuts and defense. Like, come on, we gotta find something in between.
We'll see what happens. We're a long way away from it. We have no idea who's going to come out of either of the primaries. So cross that bridge when we get there.
Yeah, I mean the challenge here is that you really have to focus on the midterms now, right? And the midterms are going to be very very interesting to see where we end up, because if the Trump administration loses the House, which in all likelihood, in my opinion, is very likely, then you've got yourself a divided Congress, in which case that could actually work out well, because gridlock tends to be
is great for the market.
Yeah, gridlock tends to be pretty good for the markets. But then again, I don't know. Like it's a weird situation for sure.
So Comcast, going to go through a few things real quick, and then we'll really get into it. This is a company that has destroyed shareholder value. This is a company that is down 41% over the past 5 years. Ugly chart. You look over the past decade, it's up 3.7% before you even account for the dividends. In an era where over the past decade, the S&P 500, just a SPY index fund, is up about 225 to 230%. So shareholders of Comcast have been left out of the everything rally the same way shareholders of Verizon have. At this valuation, it looks interesting, especially with a 4.46% yield. So just to give everybody just some ideas of where we're at on them, Comcast is doing $123 billion in revenue, gross profit of $88 billion, operating income $22 billion, net income $22 billion, and from a free cash flow perspective, they're doing around 21 billion or so free cash flow, and they are buying back shares hand over fist, and they're paying a large dividend. So in the past several years, they've done 13, 11, 9, and about 8 billion in buybacks. On the dividend, they've raised the dividend for 16 consecutive years. Great growth rate on the dividend, 7.63% on a 5-year CAGR, compound annual growth rate, and a very low payout ratio, 30%. So a very small portion of their earnings is going to the dividends. Now, I'm just going to go through some very quick facts about Comcast. Let's give a very quick overview. So in Q3, residential connectivity and platforms was 17.86 billion. Total content and experiences, 11.7 billion. So they have 3 segments: NBC Universal, Media Networks, News, Sports, and Streaming. This is actually when I started really looking into it. I'm like, oh, this is freaking Waystar from freaking Succession. So their core brands are NBC, Telemundo, Peacock, NBC News and NBC Sports, and Bravo. Then you have studios, film and television production. Everybody's heard of NBC Universal Studio, and the production brands, Universal Pictures, Universal Film Business, Focus Features, Illumination. Then you have theme parks and destinations. I did not know they own Universal Studios Hollywood, Universal Studios Japan, Universal Beijing, Universal Singapore. They own Sky Europe. They also own Eximo and Comcast Spectator. Now, they're doing a spin-out. So the Versant spin-out transaction. So Comcast board approved the separation of certain cable television networks and complementary digital platforms. What looks like is going into the Versant company are the USA Network, CNBC, MSNBC, Oxygen, E, SYFY, Golf Channel. Then the digital platforms, Fandango, Rotten Tomatoes, Golf Now, Sports Engine. So it looks like shareholders as of December 16th will receive Versant shares via pro-rata distribution, 1 share for every 25 shares of Comcast Class A stock they own, and the distribution date is January 2nd. So this is happening very soon. And it looks like Versant is expected to incur $2.25 billion in debt of proceeds to pay Comcast a special cash payment, et cetera, et cetera. So the question that I have for Kris is, do we think that this spin out is going to do anything for Comcast? One, and two, is this just a sentiment play that may not gain traction because of how big streamers have become? And is this going to be dead money? I don't know. I can't wrap my brain around that.
So first you have to dissect there's like three key concepts to this whole thing that you have to understand in order to make this investment case work. By the way, I do not have a position in Comcast. This is just me doing an analysis, seeing if there is a potential for Comcast to unlock shareholder value long term, right? So this is a good way to help people understand how companies can sort of unlock value depending on how they can reorganize their structure. So if you think about Comcast has something called a conglomerate discount, right? So if you go back to the days of like GE was in all sorts of like things. They were in, engine manufacturing. They were in, building rail like trains because they bought Alstom. They had a bank via something called Synchrony. They had a power plant generation thing. Then they bought Baker Hughes. So they had, all sorts of oil field operations and stuff. And so what tends to happen is when you commingle so many businesses into one, you sort of have this situation where the ability for the business to generate cash and return value to shareholders gets muddied up. And so you don't realize like what you have, right? So right now, if I sold socks and I sold, t-shirts and I sold TVs and I sold, internet service plans and I sold all sorts of things that were not related to each other, it's really hard for the market to value me as a business. The other thing is some parts of the business are declining in value and they're deteriorating, while other parts of the business are actually accelerating and doing really well. And so what tends to happen is because you're so big, that conglomerate discount can really hamper the company's overall valuations. So sometimes it actually becomes value accretive to spin things off, right? So if you look at how Comcast is structured, Comcast, the dying business that it has is more related to its linear TV networks, right? So back in the day when you got cable TV, you weren't just buying the internet. You were also getting linear TV subscriptions to all those companies that you list, all those channels that you listed. Typically, those linear TV channels are very high margin, but the thing is, no one's really watching TV as much anymore these days. Everyone's kind of, doing the streaming, and right now me and you are on YouTube, and, that means that's less time and eyeballs on the traditional TV. And so that business is sort of like a melting ice cube, right? So when you have a melting ice cube and then you have another part of the business, which is Peacock, which is the streaming business, that's also losing money. It's like, what the hell is going on here? Then of course they're also losing subscribers when it comes to their in their internet business, right? So their cable internet business, because Verizon, T-Mobile, they're getting a lot of market share via fiber optic. And also via FWA, which is fixed wireless access. So people are just saying, what the hell, like all sorts of business, like this business is kind of like slowly melting down. And so if you look at the PE ratio on this thing, fine. What's the PE ratio on Comcast?
I think it's 7. Hold on.
Nope.
Yeah, 701 on the forward.
Okay, so 701 on forward. It was literally 12 months trailing. Look at the 12-month trailing PE on this thing.
I can't see the 12-month. I can only see what they're expected for this year.
Man, why don't you have fiscal AI? What's going on with you, man?
I'm not
Who's my
paying
coding?
for it.
Get it? Huh?
I'm not paying for it.
It's not that expensive. Jeez, for the amount of money that you manage, this thing is amazing, man.
Listen, if they want me to use it, they can contact me.
Bro, I'm cheap, but that's super cheap.
I got Seeking Alpha. I'm good.
Yeah, Seeking Alpha's like blah. Okay, so let's just look at the PE ratio on this thing, and we'll just get rid of this. Hold on one second. Okay, so last 12 months trailing.
Can you share it so I can share it?
Yeah,
on
yeah,
here?
yeah. I got you. Okay, so here's their PE ratio. Their PE ratio is about 4.87 right now, and then on a forward basis, of course, it's going to be different because they're spinning out the some business. So let me just do this because we can accurately reflect it. So you can see from a PE perspective, they're super low, right? The key here for shareholders, for unlocking shareholders value, is by splitting this company off. What you're doing is saying to this old legacy business that's on the decline, we're going to take those assets and put them on the side. And then what we're going to do is we're going to take debt on the balance sheet, load that entity up with the debt, and we're going to stay here and focus on the high growth parts of the business. So what are they retaining? They're retaining the mobile internet business, they're retaining the studios business, and they're retaining theme parks and all that stuff. And those are actually their segments that are growing at a pretty good pace. So if you look at the IP that they have under their studios business, it's actually pretty good IP. Right. So if you look at all the crazy valuations that Warner Brothers Discovery is getting, if you look at Comcast has some amazing IP. Let me just bring it up. Universal. So right here. So if you guys have ever been to Florida, like at Universal Studios, they just did this new thing called Epic Universal. They just opened this. It's pretty insane. Right here. Yeah. So they have like the Harry Potter franchise. They have the Mario, like Super Mario World there. It's pretty crazy how big it is. But this is their growth engine that they're hoping to catalyze on. And then also they've got the internet business, and they're making some changes around their cable business, where they're adopting some new technology that lets you get fiber optic level broadband, but you don't have to get fiber optic. You can just do it via your traditional cable. And because they can do that, they're actually able to offer some crazy deals right now. They also have one of the fastest growing broadband services, like wireless, like cell phones. And the way that they work is using something called MVNO. So basically what happens is it's the backhaul is done by Verizon, but the front end of it is like Comcast. So what you can do is you can bundle wireless cellular services with your internet services and get a really good deal. So let me kind of show you what I'm talking about. So CM Xfinity. And this new technology could theoretically be very disruptive. So like right now you can get a gigabit internet speed. I don't want to put up an address. Let's see if I can do it through zip code. Yeah, like right here, you can get like 1 gig speed for $50 a month, plus like what is it called, cell plans. And I think the total was like $20 a month per cell phone line, and it's a pretty good deal. I don't want to sign in. Let me just get a damn thing, man. I can't click on this without like revealing my home address. Hold on, let me see if I can do it off the screen and then show you guys. Okay, there we go. Let me just make sure my address isn't on here. Okay, there we go. So like right now, a gig for 5-year lock-in, right, is $50 a month for 5 years. And then if you get the cell phone plan associated with this thing, and you do multiple lines, you can actually add, let's say I want to do, I don't know, like right now I have like 8 lines. So 8 lines, it ends up being almost $200. I pay right now, even with T-Mobile, with all the discounting and everything else, I'm paying like $290. This is a pretty good value proposition if you think about it, and it's locked in for the next 5 years. So if they're able to sort of get this traction going, then what you could see is actually the bleeding in subscribers actually start to diminish, in which case they could actually start targeting expansion going forward. So it's, like I said, it's a theory. It's worth looking at. Like I said, I have to do way more research on it, of course. I'm happy with what I have right now, but I'm always looking for opportunities to get better pricing on the plans that I have. So, it's something to look at. But right now, one of the things that really does excite me is like if you look at this Comcast wireless subscriber growth right here. The trend is that they're actually growing their wireless subscribers. Not this 2018. Let me just do a new one. Okay. Yeah. So Comcast faces average revenue per user pressure as broadband losses started to stabilize. So right now you can see this thing kind of go this way. So we're at the peak of problems, but what you're starting to see is kind of it reversing a little bit, going in the other direction. And one of the things that could be a growth driver for them going forward is right here. Free mobile line. Let me just do wireless subscribers. Right here. So they added last quarter, they added almost 414,000 wireless lines. So you can kind of see how like all the all the connectivity companies trying to just like, what is it called? Disrupt each other. But these guys are on another level. So if they're able to recapture or at least stabilize the bleeding in terms of their mobile broadband, not mobile broadband, sorry, with their broadband services, while at the same time expand their wireless lines, that could be a really big driver of a re-rating for this company going forward. So it's right now, if you look at it, they have almost 9 million mobile subscribers, which I thought is kind of insane if you think about it. 9 million people use what is it called? Subscription via their cable internet plan. Yeah.
So
what do you use? What do you use? What's your internet plan?
So I use Spectrum.
Okay.
And I am highly considering getting Verizon Fios also.
Mm-hmm.
Because I don't want to rip Spectrum out, but I want a dedicated line for this computer. So I'm thinking about getting Fios because I think it's probably a little better than Spectrum, even though Spectrum says they have 1 gig up, 1 gig down.
Yeah.
So we'll see. But the question that I have about Comcast is, do we think it can outperform the S&P? Because that's how I'm judging things now. Because if I think that over the next 5 years, the S&P is going to double again, am I going to get a double out of Comcast?
I think if you think about it from a valuation perspective, the market is already riding at such a high level that I think eventually when we do get sort of a correction, you're going to want a lot more margin of safety. And this is the kind of business that has significant margin of safety, just purely based on the current valuation, the transaction that they're doing. And, you don't necessarily need a whole lot to move the stock in another direction. It's literally about sentiment changes. So while everyone else is kind of like chasing the next big thing, this could be a nice value proposition. Like I said, I don't have a position right now, but I am doing the math on it, and it's worth looking into. And I really do want to see if they're able to move the needle in the other direction when it comes to both their subscribers count, but then also the profitability that's going to show up from their Epic Universe thing. Because Epic Universe just opened up. Let me just see. And I wonder how much profitability that thing can actually generate. Epic Universe.
Yeah, I don't think you get hurt with Comcast here. And I actually think it's an interesting income play. My thing with it, though, is if you're not looking at it from income,
Yeah.
then do we think it can at least match the market? I'm not sure at this point.
I mean, I think it could beat the market if there was a re-rating in how the market's currently being valued. I mean, you know, I keep going back to where are we in terms of valuations, and I think right now the key is margin of safety. Like you really, I really think the market is kind of like discounting the value of oh, I didn't know this. This is interesting. Elon Musk to help build underground transportation system for Universal Orlando Resort. Oh, there you go, man. I didn't even know they had a deal with Boring Company. New ways of getting between parks soon. The shuttle bus crawl from Central Florida traffic. Epic Universe to set. I really like that. That's a good idea. It's a pain in the ass to get around everywhere in around there. Islands of Adventure. Huh. Yeah, I'll read up on this more. Yeah. I think right now it's not a bad time to start working on margin of safety plays, especially if you want to diversify away from just unlimited growth. I think at some point.
So let me ask you this: if you had to pick one or the other, Verizon or Comcast, because they're both in similar situations, where do you go?
See, that's the challenge, right? This is where it's a question of what is the market not valuing and what is the market valuing right now. You know, it's like right now everyone is focused on sentiment. Everyone is focusing, not sentiment, sorry. Everyone's focusing on growth and AI and everything else. And I'm asking myself, like, one of the drawbacks to, not drawbacks, but one of the key considerations going forward is if we do become a lot more dependent on AI, that just means that we need way more upload and download capacity going forward, right?
And the reason I ask it about Verizon is because Comcast has got $93 billion in long-term debt. The long-term debt profiles of both companies are very similar.
Yeah, but I mean, if you have a cash flow heavy business like we just saw, then the debt is not really that big of a problem, you know?
No, I get that, but Verizon's doing about $15 billion more in EBITDA.
Yeah,
So
but remember, but Comcast is also doing a lot more in share buybacks, and their dividend is not.
They're doing much more in share buybacks.
And remember, they're only doing 30% of their free cash flows going to. I mean, first of all, whatever the numbers are right now, we cannot judge this business based on today's numbers. And the reason why is because after the spinoff,
I got to see how much that impacts the top line.
Right, exactly. We have to understand, like, okay, from a business standpoint, once they kind of divvy up the assets to find out where the free cash flow is, how much of it can it support. And then
let me ask you this. I'm going to do a poll in the chat, and if you could do me a favor and answer it truthfully, I would really appreciate it. Kris, do you pay for regular cable?
I actually have Verizon. I have T-Mobile internet via fixed wireless access. So I have been a T-Mobile subscriber forever. And one of the things that they offered like a few years ago was this 5G wireless thing that I could just get added on to my my bill, and I would just have a consolidated bill. And because I was in the military, they have like a military discount, so I thought I was getting a really good deal. So I was like, all right. So I love my cell phone plan, my everything, but you know, like I said, the opportunities right now for new things are starting to come up. My internet, like my wife is working from home now, so check this out real quick.
I meant cable TV, not fiber internet.
Yeah, I have hold on one second. Speed test. The problem that I'm running into, and I told my wife today, is that I'm hitting bottlenecks. And so I have right now my mobile internet speed. I mean my internet speed. Check this out. Just search, share my screen. It's about 150 megabits. down and about 100 like 60 megabits up, which is not bad. I mean, it's pretty good. It gets all the stuff that I need. The thing I really like about it is that it is what is it called? It is good, but I could probably get a gigabit of speed with the Comcast thing. So like I said, if I'm paying the same amount and I'm getting way more in terms of broadband and speed, it might not be a bad idea to try it, especially now because my wife's working from home and we're sharing the internet, you know. Bro, that's slow as F. Fios is 1 gigabit. And one of the things is I don't have Fios in my area. Sorry, guys. That's just not how things work sometimes. Fios is expensive for them to install.
The upload is so much more important than the download.
Yeah.
Only because if you're working from home and she's working from home and you're both on meetings that are video and you're running other things, it sucks to freaking upload bandwidth for some reason.
Yeah.
So, but do you pay for cable TV?
No.
Okay.
Hell no.
So right now we have 88 votes. In all seriousness, everyone, if you could please answer the poll that I put in the chat, I would really appreciate it. I want to really make a point about something. So I'm going to let the poll go for a few minutes. But right now, we have around 100 votes. 78% do not pay for regular cable TV. And I'm not sure if this is necessarily the fairest audience to do this poll on because we're streaming on YouTube, which has nothing to do with cable TV. But I think that Comcast, here's one of my things that makes me think, as the boomer generation leaves us, how many people are actually going to pay for cable TV? Now, I pay for it, but I have a very specific reason on why I pay for it. I'm not going to say the reason, but if I was able to not pay for it, I would not be paying for it. And there may be a world where I end up getting rid of it soon, but I don't think most people are paying for it, and this poll is showing it. We have 153 votes, 82% no. And as boomers phase out, I think the legacy media companies are going to have a very difficult time. We've seen it with newspapers. We've seen it with magazines. I think we're going to see it with TV also, and it's going to be more of the Netflixes, especially if Netflix gets Warner Brothers. They're going to get an entire studio where they can just make their own TV programs the way that they're already doing, but embed that stuff even more into it.
Yeah, but Steven, that's the whole thing. That's why they took the linear parts out of their business, took all their debt and loaded it up on that thing and said, get out.
No, I get that, but that's my point exactly, that these linear plays could be in a lot of trouble over the next 5 to 10 years. One, because they have massive debt loads, and two, because I think that their target demographic is not going to be around. I mean, how many people that are 25 are paying for cable TV? They're getting Hulu, Netflix, YouTube Premium. Between the three of those, $40 a month, you have pretty much everything covered. I mean, just your normal, and I'm not talking about Hulu TV, just your normal Hulu has so many old TV shows for $12.99 a month. It's incredible. Yeah. It's just so much cheaper. I mean, I know what I pay for cable, and it's sick. It's sick. So we're going to end the poll. The final numbers of the poll, 82% no with 176 votes.
For what? That they don't
use cable TV. Do you pay for cable TV?
Oh no, I agree with that. I'm not long on cable TV. You know, that's why I'm telling you. The deal right now takes that cable TV segment and strips it out of Comcast. Takes the debt, strips it out of Comcast. So what you get is more of a pure play in broadband internet, in wireless. So
we got to see how much debt they're able to funnel into it.
Exactly. That's the key right now, which is now if you're able to take a lot of that debt, load it up in this dying business, right? Now all of a sudden you're in this other zone where now you're actually able to kind of capture real market value. That's what I'm trying to say. That, like I said, the deal has to close, and I mean it's already closed, so it's not like you can go back. But like I said, I'm still analyzing the structure of this whole thing. But I do think at some point it could end up being that if they're able to kind of regrow their other businesses that are more high growth, this thing can get re-rated from a low PE to a higher PE, in which case now you're going to get value. So
Yeah, look, this is definitely something that's interesting. I also don't know how the dividend's going to change, and if they're
Yeah.
going to end up slashing the dividend a little bit. I have no idea. I need to see what the projections are on EPS and everything.
yeah, like I said, and I'm telling you, one of the things that people, and I'm glad that we're running this poll right now because I'm seeing a lot of people hating on this thing, and I actually like it when people hate on some of this stuff because it means that the people may or may not be recognizing the value of some of this stuff, you know, like it's and trust me, I'm totally with it, guys. Like I understand, like the minute you hear, what do you mean cable Comcast? Like that's not what I want to be in. Like that's a boomer company with a boomer stuff. And I'm like, I'm looking at this and I'm saying, wait a second, no, like there's value here. It's just people may or may not be recognizing it. So, you know. And hey, listen, some people are like, you can stop the research, we ain't buying. I'm not even buying right now. So I don't expect y'all to buy it. So, you know, just like I said, do your own research, you know, figure it out. I'm still doing my research. I think that if they're able to successfully change around their future growth prospects, the market could re-rate it higher. Especially if they're able to generate a lot of free cash flow and buy back shares, it could be a good play. But like I said, it's something that I have to do more research on. But that's the thesis behind Comcast. And I think if you really look at certain businesses, that value unlock from spinoffs is a big driver in future returns. And I think the market is kind of leaving this industry for dead and this business for dead. It is very similar to what happened with Warner Brothers Discovery. You know, everyone just said, "Oh, you know, this is a company loaded up with debt. It's stupid." And now you've got Oracle and you've got Paramount. Not Paramount. Sorry. You've got Paramount and Netflix fighting over it. It's pretty crazy. So
yeah, I got a theory, and somebody said in the chat that YouTube Premium and just YouTube in general has gotten so big because every second of every day there's new content, and people can pick what they want, and they can go back and forth any genre, any type of thing, from cartoons to financial and everything in between. And I think that things like Netflix, things like Warner Brothers are going to be more nostalgic. I can't tell you, I don't have Netflix anymore because every time I would log in, I would surf it for 25 minutes and still not find anything I wanted to watch. And the only time I get it is when a new season of either The Night Agent or The Recruit comes out. So I get it for a month and then I cancel it. The ones I don't cancel, obviously Prime because of everything else you get with it. But HBO is the one I never cancel. HBO Max to me is the crown jewel. I will never not have it because the amount of media assets on that I can go back and watch, especially the 30-minute shows. So the fact that you have Discovery in there and all those other assets, you and Warner Brothers, you have Big Bang Theory on their platform, and you have all the HBO stuff: Sopranos, Wire, Oz, True Blood, Game of Thrones, Ballers, Entourage, Westwood, Curb Your Enthusiasm. I think that that's going to be Warner Brothers Discovery is a crown jewel. Apple screwed up by not acquiring them 2 years ago when I said they should have. And I think that this deal is going to get bigger because these are never going to come on the block again. If Netflix gets a hold of them, they're never coming up again. Same with Paramount. This is going to be a duel for content because of the nostalgia factor. Because so many people go back and watch that stuff.
You know, this is kind of interesting in the chat right now. YouTube Premium is probably the most liked product in the chat right now. Everyone is talking about it. Like, it's actually interesting to see what's funny is literally about 6 months ago when we were long on Google, everyone was like, no, Google is dead, search is dead, blah, blah, blah. And it's like, this is what I'm saying. Like a lot of times the market has these hidden jewels that are sitting in these companies and everyone looks at the main product, but then kind of ignores the other parts. Same thing, and I like I said, this is where you have to really dig down deep into companies and find something. And so my question right now that keeps popping in my brain, which is, what the hell do Netflix and Paramount see in the Warner Discovery ecosystem that's just getting them to go absolutely ape shit on the price?
Do you know how many people are members of HBO Max?
Well, no.
Google it. I don't even want to tell you. Google it.
Yeah,
I want to see your facial expression.
Let's see. HBO Max total subs. Let's see. 128 million global.
Huge.
Yeah.
It's huge.
Yeah, there's a pretty good subscriber count.
And the asset. Have you actually looked at the assets in the book? I'll bring it up in one sec. Hold on.
So then why was Warner Brothers Discovery trading so low?
It wasn't profitable.
Ah, okay. So the content is good, but the business profit model sucked. I mean, literally, this was $7.
Look, they were loaded with debt.
Yeah.
They were paying it down. They were getting back to profitability. They have big EBITDA.
But is there debt that was crushing them?
Yeah. Now, I'm bringing up their brands right now, and I think it's going to surprise you what they actually own.
Okay.
I mean, HBO is the crown jewel.
Yeah. HBO, then you got Warner Brothers, HGTV, Discovery, not really watching these.
Yeah, but you say, but think of the demographic that this covers. Think about it like that.
I mean, the only one that I see that's valuable is DC, probably for the movies.
TBS and TNT are huge for the linear networks.
Keep going down.
Gets views. DC, you're right. ID gets views. You have the different Warner assets. Golf Digest, I didn't even know that they own. They own New Line Cinema. Sci Network. Cinemax, I actually didn't even realize that they owned Cinemax until the other day.
Yeah.
True TV. I mean, these are a lot of freaking assets. And when you think about embedding all of this into Paramount or into Netflix, it becomes huge, especially if you're going to license this out to traditional cable networks.
Yeah.
Because
I mean,
not embedding it. Think about the licensing fee.
I have HBO Max primarily because of Game of Thrones. Like next month, the 97 Kingdoms is coming up, House of the Dragon, all that's coming up. So I'm like, I'm gonna keep it around for that,
But but HBO has such great content, and look, when you're on that platform, you're getting the stuff under Warner Brothers in there too, with Big Bang Theory and other things like that.
Yeah.
So there's a lot of content in there, and you put this on the block, people are going to want to buy it for the assets. I mean, look how much Amazon paid for the James Bond franchise alone.
Yeah.
Content is king.
Yeah. Yeah, I like the 50 Cent universe is actually pretty good too. Like I don't know if you've watched
Power is unfucking believable.
Damn, man, you don't have to curse that much, dude.
I'm a New Yorker. I curse.
I know, but
and I put not for kids on these videos. So,
okay.
I am actually. I got Stars again specifically to watch the new season of Power Force, and I found myself rewatching Power again and rewatching Power Ghost.
Yeah, I'm actually watching Force right now. Actually, I'm starting to catch up on it.
What season are you on?
Still season 1. Like I said, I've got to take some
It's
time. Like
insane.
I love the Joseph Sikора's character, Tommy Egan.
He's so good.
He's so freaking good, man. I thought he was a better character than Ghost was.
Then Jamie St. Patrick.
Yeah.
Yeah, I'm trying to get Matt on Power. It is such an underrated show. Everybody makes fun of it because it's 50 Cent that made it. It is so good.
Yeah.
So good. And it is grit. Like, you talk about a gritty show that does not hold back. Like the original Power I don't think they've made a show as graphic as that on TV.
You know what? I'm actually looking for some new things to watch. These days I'm trying to like just chill a little bit. Does anyone have any suggestions?
I got some suggestions.
Huh?
I got some suggestions.
Yeah.
So we'll go older stuff to really new stuff. Have you ever watched Sons of Anarchy?
Love Sons of Anarchy. Watched it from beginning to end.
Amazing. Okay. Did you watch 24?
Love 24. Yep.
Okay. Great. So if you like those, did you watch The Unit?
I did not watch The Unit.
Okay, so The Unit is on Amazon Prime, I believe.
Yeah, Sons of Anarchy, Mayans is. I thought I saw like maybe.
Mayans was okay. It was good, but it wasn't. It was disappointment compared to how good Sons was.
Yeah.
You would like The Unit, and I hated it the first time I watched season 1. And my buddy who was in the 82nd Airborne said to me, rewatch it with the lens of this is the closest thing that you'll ever see to how the military works.
Yeah.
And I rewatched it, and it's fucking great.
Did anyone watch Blacklist?
Oh, so good.
I gotta start watching Blacklist.
James Spader is unbelievable in Blacklist.
Yeah. I gotta watch Blacklist.
Unbelievable.
Yo, guys, let's talk about 2026 stocks.
We just talked about stocks for an hour and 35 minutes, guys.
Spartacus and the spinoff. I do like Spartacus. I'm not sure I'm gonna enjoy the next one that's coming up, the House of Asher. We'll see. We'll see how that goes.
Did you watch Ballers on HBO?
Yeah, with
so good. I like those stupid shows.
Yeah, me too. Spartacus is stars. Yep, that's right.
Yeah, I'm watching Tulsa King. I think it's good. I like it. And
Landman is good too. I didn't see this weekend. Did I not watch the episode? Yeah, I gotta catch up on Landman this weekend.
Dude, Landman is so good. Like, there's a lot of good content out there.
The whole Taylor Sheridan universe is amazing. The only part is I think Taylor Sheridan is no longer partnered with Paramount anymore.
Yeah, no, he's doing his own thing, I think.
Yeah.
And they just started shooting the Rip and Beth spinoff.
Really?
Yeah.
They're gonna do another one on top.
They're doing a spinoff with them.
Oh, interesting. Okay.
Yeah, Yellowstone is one of my favorite shows of all time.
Yeah, Mayor of Kingstown is really good too.
Legit.
With Jeremy Renner. Yep.
Legit.
Love that.
Did you watch Animal Kingdom?
No. What's that?
Stop what you're doing. Like, you should just leave right now and just start it. Okay. I put Matt on it. Matt, if you're in the chat, please let Kris know how freaking good Animal Kingdom is. It is unbelievable. The fact that you liked all the same stuff as me.
What is it about?
So, how should I describe this without ruining it? If you like Sons of Anarchy, you will love this. It's about a family in California that just runs crimes. And it is unbelievable. And the fact, pull up the cast real quick. I'm going to pull up the cast. Hold on.
Okay.
Did you watch Peaky Blinders?
Yeah, love Peaky Blinders. My wife loved it too. They have a new series too, like the House of McGinnis or something or House of Guinness. I saw like the first episode. I wasn't as thrilled about it nearly as much as was the other one.
All right, here we go. Huge cast.
Okay.
I mean, big.
Scroll
And
up. What is it? Animal Kingdom?
Animal
How come I've never heard of this one?
Yeah, it's really freaking good.
Okay.
When Dennis Leary came in, like,
Yeah.
I'm telling you, it's well worth it. A lot of people in it. It is
Yeah.
great story. I can't say enough good things about it. I've rewatched it several times.
Okay. I'll watch it. I'll catch up on it.
Yeah, you can get it on Prime.
Yeah. I'm looking forward to and this has been sort of announced, but I'm a big Warhammer fan, and they're finally doing maybe like a live action version of like a TV show on Amazon Prime. But dude, let me tell you, this is the one company that I just I can't believe I didn't buy it. Like,
Which one?
have you heard of Gamers Workshop? The thing is, the reason, the reason why I didn't know about it is because, like, well, I knew about it, but I just didn't think of them as an investment because they're not here in the U.S. But for international audiences, I mean, anyone here who's like a Warhammer fan, check this out. This company, look at this. In 2015-16, it was $8. Now it's like $264. If you know this business, dude, the amount of content, like Warhammer content that these guys have is insane.
I know.
Insane. I mean, and right now it's about $8 billion market cap, so it kind of like keeps me away. But it's like,
I didn't realize how crazy people get with the figurines of it.
oh, dude, people love it. Like,
Oh my god! Like when I found out how much people spend on the fucking paint for it, it's insane.
yeah, dude. Warhammer 40K is like huge, and also, you've got like a whole like ecosystem.
Kris, hold on. This comment is for you, and I can't read it, but you can.
Yeah. all the dudes in Animal Kingdom look like they could do guest cameos on White Boy Weekly. Yeah. Is anyone else here fans of Warhammer, or am I the only one? Let's see.
I'm not into it, but
Yeah.
I know that it's a huge following only because of the alternative asset stuff that I invest in.
Yeah.
You're gonna laugh. I have a Mick coming to the collectible show at the Westchester Center in a couple weeks. It's going to be very interesting.
You know, I was watching the iced coffee hour with Graham Stephan, right? And he brought this guy on that spoke about nothing, you know, like about collectibles, about the total return that this guy's had. It's insane. Like the level of
Patrick Bet David episode where he's talking about
no. It's the latest one that just came out like this week.
I haven't seen it. I'll take a look at it.
Yeah, it's pretty insane, like what he had. Yeah, it was pretty, like, this guy, he invests in all sorts of like little things that eventually blow up. And so he was talking about like a Pokemon card that what's his name? Jake Paul bought from this guy in Dubai for like $5 million.
Yeah, the Pikachu illustrator.
Yeah, it's like a Pokemon card for $5 million. Like, what? Like, insane, you know?
So I'll blow your brain really quickly. So your brother probably knows about this shit.
Dude, I was at my mom's place this weekend in Savannah, and my brother has all his Warhammer stuff there. And he's got Magic the Gathering, dude. He's got over like $200,000-$300,000 worth of Magic cards, and I'm talking about like PSA 10 graded stuff. Like,
so that's what I'm going to show you right now. How many cards do you think PSA grades on a monthly basis?
I don't know.
I'm going to bring it up right now. Last week. 462,000 cards PSA graded. Think about that fucking throughput.
The question is, how do they make money? Like, what's can you buy any of these things like stocks?
PSA used to be public. They took the company private. They're on pace to do 22.4 million cards graded. Just the rock bottom price per card to get graded is $25. And some cards cost thousands of dollars to grade because there's an upcharge on the market value. So you could send something in, pay for like the $1,000 level because you're not sure if you're going to get a 10 or not. And if the card's worth $100,000, you're going to owe them a couple of grand to get your card back.
But doesn't GameStop like offer some kind of services with grading now all of a sudden?
PSA, yeah, it's a PSA fulfillment center where you can drop everything off and send it in. And the crazy part, over the past month, TCG is roughly 60-65% of everything being graded, which is predominantly trading card games. So Magic, Pokemon, and One Piece are the three biggest.
Gotcha.
And for categories, how do I filter?
It's kind of crazy that like little pieces of cardboard and paper are worth so much money.
It's not. This is our generation's artwork. People don't care about oil paintings. They care about this stuff. This is the nostalgic stuff to them. And because a Michael Jordan 86 Fleer only has so many of a 9 and so many of a 10, there's such limited supply and the collectors are so hardcore. These things are worth so much money. Everybody can say bubble. That's fine. These things are just going to go up in value. They can retrace 50% just like stocks. They are going to keep going up.
I don't know if you know this. There's this guy who's been buying up, I think like PSA graded like one card of.
Yes, in Magic the Gathering, they're trying to move the market. I know all about it.
Not Magic the Gathering. I was thinking Pokemon, but I mean, I'm sure that there's people in Magic that do it too. But in Pokemon, where there's like this one card, I think it's a not Kabuto. What was it? It's like some guy. If you look at it, he's got like almost everything in existence.
Can you text your brother? I'm going to text you something. Send it to your brother. There's this guy, Rudy, the Magic guy. He has a YouTube channel called Alpha Investments. The shit, like, he has turned his business into being worth hundreds of millions of dollars. He's the largest independent reseller of Magic the Gathering and Pokemon cards.
Yeah.
And I mean, he took out a binder in a video from his safe, millions of dollars worth of Magic cards, just in a binder. Like if you go on YouTube and you look at Alpha Investments, you look at all the videos he's done, your brother will go down the crazy rabbit hole with this.
Okay, I found it. It's this guy called Kabuto King.
Why is that sound familiar? On YouTube?
Look, it's on X.
All right, hold on.
Yeah. It's insane, dude. This guy,
How do I spell it?
Kabuto King, Kabuto King.
The one with the blue check mark?
Yeah.
Okay.
Share your screen.
Yep. This is exactly what this is an unregulated market, and people are legitimately trying to move markets because there's no regulation on this.
Yeah. I mean, imagine buying up every single one of these cards and then listing them some by some on TCG Player. Nah, what you could do is just destroy the other ones. And basically now you've only got the one card in existence. You know, it's kind of like burning the other things. Because the thing is, what you're doing is taking away liquidity. If you drain the liquidity completely, then that means that you're assigning it something of value, right? Like the Mona Lisa. If there were 100,000 Mona Lisas, it's like, whatever, who gives a shit? But there's only one Mona Lisa.
You guys do this. So Collectors is the parent company of PSA. and they acquired SGC, which was the next or the third largest grading company. And now they're acquiring Beckett. Look at this. This is not clickbait. This is actually real. Their congressmen are now asking the FTC to investigate collectors, the parent company of PSA,
For speculation?
for anti-competitive in the industry. Because they're going to have like 90 to 95% of all the grading in the market.
Who is?
Collectors, the parent company of PSA. Because they're going to own PSA, Beckett, and SGC.
Okay.
Yeah, it's freaking wild. And then
private? We can't buy this company? Shit,
Private.
That sounds like a pretty good business model to me.
Private. You know about what Kevin O'Leary did, right?
No.
Hold on. Fucking Kevin O'Leary.
I'm buying all the Philip Rivers cards. Philip Rivers. Oh man, I liked him when he was with the Chargers. Wonder what happened to him. I haven't heard about him in such a long time. But the Mona Lisa says handmade by famous. It was an analogy, not a thing. Ran over 5 people in his boat. Shit, I don't know that. Wait, Philip Rivers is playing right now? There's no way. Wow. Holy shit, I didn't even realize he was with Indianapolis. When the hell did he start with Indianapolis?
I should have fucking bookmarked this.
Yeah, Philip Rivers is playing again because of health insurance. Wait, what? Yeah, I was saying he's like 45 years old. Who the hell let him on the field? Hold on. Let's see. Colts retirement. According to Rivers, he received interest from teams over the years during his retirement in the wake of Colts quarterback injury. Indianapolis signed him to the team's practice squad on December 10th. 3 days later, Colts reactivated Rivers from the practice squad due to his return to the NFL. Rivers pro eligibility waiting period. Wait, Rivers made his first start in nearly 5 years on December 14th against the Seahawks. Rivers finished. Bro, what the hell is going on here? That's crazy.
Well, I can't find the site, but O'Leary's been buying up. He has his own private fund for sports cards now. And
Philip Rivers has like 9 kids to support. Jeez.
This one he paid $13 million for. It's a dual logo man, Jordan Kobe. I can't find the actual fund. I don't know why I don't have it bookmarked. But this is becoming such huge business, Kris. It's incredible.
Yeah. Interesting.
Yeah, send your brother the Rudy the Magic Guy stuff.
Okay.
We'll get a kick out of it. And you guys start watching Animal Kingdom.
I will. I think we could end it here.
Yeah.
Yeah, sorry guys. I know sometimes we talk about boring companies like Comcast, but I promise we try to unlock value, and not every value ends up being.
Maybe we do SMCI next week since everybody's asking for it.
SMCI. I mean, they're low margin business. You know, could they do well with Blackwell? Yes, but I don't know. I don't know if the market will recognize it. So, whatever. Yeah, we could do that. Are there any other companies on your? Are there any other companies on your radar for next year, 2 years, whatever?
I mean, look, I'm still standing by Salesforce is going to be the AI catch-up play next year. It's so undervalued.
So one of the things that I've been doing, and y'all are gonna laugh at me for doing this, but everywhere I go, all the restaurants that I've been going to, they all have one thing in common. Do you know what
Shift
that
4.
toast?
Toast. That was
Yeah.
close.
Every restaurant that I've sat down on lately, it's toast, toast, toast. And I'm like, huh, interesting. So it's kind of a weird situation where I'm like, I really need to dig into this business more because there's a lot of bullishness around toast that like they're really gaining a lot of market share. So it's worth looking into. And then like if you look at the industry in general, it's a pretty good business that's got long-term growth prospects because I mean just the wide nature of the business.
I found
The other
it.
one, the other one to look at, and I know someone like Mixed Content put up there, is Tyler Technologies. You ever heard of them?
Sounds vaguely familiar.
Tyler Technologies does like all the software for like the small and mid-sized like governments around the country. So, like I said, it's a really big value play. Toast is more of a like long-term, company share. Like, and the key to Toast, in my opinion, going forward is probably just how well integration like they could do with AI. So I think, and this is the theme that I'm actually exploring, and this is where there's some value in Adobe and Salesforce and everything else. So the layer of value creation is going from hardware to software. Right. So right now, everyone is super bullish on NVIDIA, including myself. But at some point, the question is going to be like, who is going to be the ultimate, like which companies and which industries are going to be the beneficiaries of all of the pipes underneath the AI ecosystem per se. So we have to look at these companies, especially software companies that have long durable moats, that have a lot of GRR, gross revenue retention. There are some companies like ServiceNow that have been sold off, which is kind of surprising. And have you seen that lately?
I have.
ServiceNow has been gone on the decline. Salesforce is already trading at some crazy low multiples.
Disgusting.
Then there's Adobe, which is in the same kind of thing. So there could be some value plays out there in the software space. I don't think I've ever thought I'd ever say that in my life. I've never met a value software company. And I think CRM could actually be that.
Of course, this is IBM all over again.
Yeah. Tyler Tech deep dive would be interesting. Yeah. The thing with them is that they're not super heavy in terms of growth, but they have a very strong moat in their core segment. So did you buy Fiserv? Yeah, I have Fiserv. Fiserv's been getting back to normal lately, which is nice to see, but it's still undervalued relative to where it could be a couple of years from now when they finally they've got a lot of shit that they need to work on before they get back to a great place. CRM is dead to me.
So check this out. I found the Wondershine Index. Okay. Kevin O'Leary and one of his buddies have spent $8 million on cards, and they're putting together their own index. And I believe they're going to make this a tokenized investable fund next year, potentially. But you look at something like this, there's only one of them in the world. They're saying the price hasn't moved since they bought it. They just purchased it the other month. You look at, and the reason they're going after Kobe is because he passed away. This isn't even freaking graded, and they purchased it for 2.3 million, and they're saying it's up to 3.1.
I mean, the whole thing is this is what's his name?
Vlad
was no. This is what Vlad was talking about with regards to tokenizing assets.
Yes.
Right. So theoretically, you could buy a share in something like this. The question is, how would you monetize it? Well, the thing is, with tokenization, you can actually monetize it very easily because now you can just sell your shares in quote unquote the Kobe Bryant card.
It's
so
like there's just not a lot of these out there because one, the patches, two, the signature. I mean, there's out of 5 cards and there's only 2 of them with a 9.5 card grade and a 10 auto grade. So this is going to get much.
Tyler Tech's New World is what we use. FYI, I'm fairly certain they are trying to offer the ability to do all accounting themselves via AWS. Like I said, I'll do more research. Not a bad thing to research.
All right, let's call it here. I didn't realize it's 11 o'clock already. Holy shit.
Have you tried the OpenAI browser?
No, I have not.
I tried it for like a couple of days. It didn't feel different. So I don't know. I like Chrome. I'm a Chrome guy.
I use Internet Explorer. What can I say?
Yeah. You use Internet Explorer? Did you just say that?
So
What is wrong with you? Get out of my
or
face,
Edge,
dude.
Edge,
We're
whatever
not
it is.
friends anymore. We're not
Edge.
friends. Are you
Why?
seriously using
don't
Internet
use Chrome.
Explorer?
Yeah, why not?
Blasphemy.
It
Blasphemy.
came with the computer.
Thanks, honey. My wife got me some milk and cookies. Thank you.
Oh, nice. I love
Look at
that.
You have to show them.
Love it.
Sure. What is it? My bells don't jingle with my coffee. What? Yeah, hold on.
Love it.
Yeah, there you go. So I'm gonna have some milk and cookies tonight.
I'm going to have some too. I'm going to go freaking. I got some in the kitchen.
Best investment that I've made is a great wife, honey. Love ya.
I agree.
Love ya. Yeah.
All right, everybody. If we don't talk to you, happy holidays.
You know what? You know what? The best part of this was unprompted. I didn't even ask for her. She just got me milk and cookies.
It's amazing.
I'm a lucky man.
Amazing.
Yeah.
And yeah, Kris and I are not boomers, guys. We just look at we have no problem investing in stuff that is not necessarily cutting edge.
Yeah. But we're boomers for sure, bro. I'll invest in boomer companies. I've made one of my biggest returners in the last 2 years is
It's Verizon.
Carnival Cruise Lines.
Cruise. Okay.
Anyone that it's been in my Patreon and my Discord, y'all know exactly what I'm talking about. Carnival Cruise Lines December 2026 spreads were trading at $2. Okay, but the strikes I had, they're trading at 10 something now. Norwegian Cruise Line, same thing, dude. It's been one of the best returners I've ever had. So there you go. I was there. Thanks, Ray. So Ray knows. Truist is up 700%.
Yeah, Truist
for when we bought it. 700% on those options. So, so sometimes there's value in being in boomer companies. So,
sometimes there's value in shit. Just remember that.
Exactly. And the thing is, like, when people leave things for dead, that's typically when you find good value. You just have to know what you're buying, and sometimes it works out, and it works out in your favor, and it'll do well. It'll do well. So, like I said, right now the market is the valuations on the majority of the market is very high, but there are still opportunities, and there could be opportunity in value land, especially if we do get sort of a pullback and people start to go, wait a second, maybe I need to look at companies with real earnings again, as opposed to just buying a company that's not generating any tangible return for shareholders, in which case everyone wakes up and is like, wait a second, I need to rotate my money. And then companies like Truist and Verizon, all these things get bid up,
This is true.
Yeah.
All right, everyone. I'm going to go get some milk and cookies now. See everyone later. Enjoy the rest of the night. Happy holidays, everyone.
Take care. Have a good one.